there are options of downgrading. So if you're a national bank, you can't meet the requirements, you become a regional bank, right? That is also an option there. And really, I'll tell you one thing. The average customer really doesn't know the difference when it comes to some of these things. We must have financial institutions that are ready to really fit the picture of the name they try to make, right? As against all the blitz and the glamour. Banks are not for razzmatazz. Banks are for the real deal, right? So it's not about media time. It's not about all the glitz. It's not about all the activity going on, right, outside banking. But do you have the liquidity? Do you have the system in place? Are you able to adequately provide and secure customer deposits? Look, we're here a couple of months ago. A particular bank was taken over, and the assets have been sold to cover the debts, right? If you go back to the recapitalization 20 years ago, right, and even before then, remember, you've forgotten the failed banks issue, right? Some of these banks were running ads on CNN. Some of these banks were having road shows all over the world. And so it looked as if they were solid until push came to shove. And you realize that all that glitters really is not gold. And you cannot afford to have that risk when you're talking about banks.
You know, perhaps the CBN should have explored, having this in phases. Some persons have said probably the CBN should try and get foreign direct investment for these banks if they cannot source it for themselves. I mean, whatever is being sourced is also going to be pushed back into the economy. But also looking at it in phases, probably this benchmark 2026 can just be a phase. 2 years for each, rather than having, these banks raise about 500 billion naira, 200 billion naira in 2 years. It's going to go back to the economy. Nigerians, the average Nigerians especially. So
it's not also healthy that in 20 years, no serious activity has gone into running a clear stress test. Because right now, in our own clients, our own stress test is recapitalization, right? That's how you know,
strength of
whether this bank has strength. But what does this tell us? This tells us that maybe we need to look at a proper system, right, beyond recapitalization, periodic, where you're able to gauge the strength and ability of these banks to meet their legal obligations. But 2 years is some time to raise 500 billion. However, I think that what CBN has done may not necessarily be cast in stone, right? It may be for them to identify the strengths and weaknesses of these banks and see how they'll come and help. But you see, there's a danger of pushing very strongly for FDI into our banks. He who pays the piper dictates the tune. If I have money and my money is more than yours, I have a stronger say in what's going on. If we cannot indigenously hold the strength of our banks, then that's a big problem, right? Investments can come in, but it cannot be the mainstay of strengthening our financial institutions, right? We must be able to indigenously have banks that are solid, that are strong, and then that can compete globally. So if you look at some of these banks, right, some of these banks may not be panicking as much as others because some of them may have a global outlook. And that global outlook has earned them a lot of foreign direct investment, a lot of FX revenue, right? And that is playing clearly into their cash liquidity ratio, playing into their assets ratio, and will help them, raise money even easier. I think that for the giant of Africa, or Africa's largest economy, it's something that we should look more closely to having our bank strong enough indigenously to be able to now play a more strategic role globally, right? Why don't we have Nigerian banks operating in first-tier countries actively? Why don't they have licenses? Because they don't meet the stringent regulatory requirements. Very stringent.